Hi friends, welcome to a brand new segment of Invest Talks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to Finvest Talks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button. In our previous video, we discussed about how to start investing. Which are the 8 points one should remember before start investing or before creating a fundamentally strong portfolio as a beginner. Also, we saw how to create a safe portfolio for beginners and looked into 5 bluest of blue chip stocks out of 10 which have potential to give decent returns for future. In this video, we will be discussing remaining 5 stocks along with the bonus stock which is a safe bet and it can give annual dividend which is more than your bank interest. The stocks discussed here in this video are not a buy recommendation and it is only for study purpose. Please discuss with your financial advisor before investing. Let's begin. As a beginner, before investing, you should remember 8 important points. The points are: first one, start small. Diversify your portfolio. Invest only in blue chip stocks. Never invest in free tips or advisors. Avoid blindly following the crowd. Invest in what you know or what you understand. Invest regularly and continuously. Have discipline and follow your plan. Now we will see the remaining 5 stocks of blue chip universe. On position number 5 is the company we are dealing with on a daily basis. It's HUL, Hindustan Unilever. Hindustan Unilever was incorporated on October 1933 as Liver Brothers India Limited. HUL is India's largest FMCG, fast-moving consumer goods company with its product touching the lives of 9 out of 10 households in the country. The company's business are mainly into 3 segments such as home care, foods and beverages and others like personal care. In home care, the famous brands are Surf Excel, Vim, Rin, Wheel, etc. Whereas in foods and beverages segment, the major brands are Horlicks, Boost, whereas in tea and coffee segment is Three Roses, Red Label, Taj Mahal, Lipton, Brew and others like Kisan, Quality, Cornetto, etc. In other segments like personal care, the famous brands are Pepsodent, Close-Up and shampoos like Sunsilk, Clinic Plus, facial creams like Pond's, Fair and Lovely and soaps like Pierce, Lifebuoy, Lux, Hammam, Liril, all are with HUL. It is one of the famous FMCG brand with a market cap of 5.47 lakh crores. Here the stock is trading with a PE of 66.9 which is slightly above the industry average of 58.3. It is having good key parameters such as higher ROE of 29.2% and ROCE of 39.2% which is very good. The company is having no debt with good dividend yield of 1.33% which is again a very good parameter. There are no pledged shares of this company which is another good parameter. In last 1 year, this stock has given a return of 16.1%. If you consider last 5 years, it has generated an overall return of 175.2%. which comes around an annualized return of 22.42%, which is very good. Which means you can double your capital in approximate 3 years. In case of max return, which is for a period of 21 years, the absolute return is in the range of 752%, which comes around annualized return of 10.74%. It's showing average return because it didn't perform for the first 10 years where it was moving sideways. If you have started monthly SAP on this stock from 2016, the absolute return is in the range of 57.9%, which comes around a CAGR of 9.58%, which is okay compared to the FD rates. The company is having a strong promoter holding of 61.9% with good FII holding of more than 14.95%. Overall, 87% of the holding is with strong hands. 76% of the analysts have given a buy rating on this stock with an expected max target rate of 2,953 for May 2022 as per ticker tape analysis. It is one of the most trusted band and is a very defensive bet, which can be a good bet for overall portfolio diversification. On position number 4, it's our famous IT giant and wealth creator, Infosys. Infosys Limited is a public limited company, was incorporated in the year 1981 as Infosys Consultants Private Limited. It is the second largest software exporter company with a market cap of 5.6 lakh crores. The stock is trading at a PE of 29.1, which is slightly above the industry average of 27.8. It is having ROE of 27.2% and ROCE of 35.2%, which is very good. The dividend yield is more than 2%, which is very good. The company is having debt to equity ratio of 0.07, which is also nice. The company have no pledged shares, and in last 1 year the stock has given a return of 98%, which is very high compared to its past performance. If you consider last 5 years, it has generated an overall return of 119.6%, which comes around an annualized return of approximately 17%, which is good. In case of max return, which is for a period of 21 years, the absolute return is in the range of 1312%, which comes around a CAGR of 13.44%. If you have started monthly SIP on this stock from 2016, the absolute return is in the range of 100%, which is very good. The company is having strong FII holding of 32.67% and DII holding of 9.5%. 86% of the analysts have given a buy rating on this stock with an expected max target of 2,160 rupees for next 1 year, which is approximately 64% from the current price as per ticker tape analysis. Infosys is the biggest wealth multiplier in last 25 years with a CAGR of 30%, which is exceptionally good. On position number 3 is the largest private bank in our country. It's one of the India's premier bank, HDFC Bank Limited. HDFC Bank is a new generation private sector bank providing a wide range of banking services covering commercial banking, investment banking and retail banking. HDFC Bank is the largest private bank in terms of market cap, credit and deposit with an overall market cap of 7.71 lakh crores. The stock is trading at a price to book value of 4.38, which is well above the industry average of 1.93 and is available at a very high valuation because of its good overall performance over the years. It is having higher ROE of 18% and ROCE of 6.76%. Here we will not see debt to equity ratio as banks operate on borrowed money as a part of their operation. It is having no pledged shares, which is a very good parameter. In last 1 year, the stock has given a return of 56.6%, which is very good. If you consider last 5 years, it has generated an overall return of 141.2%, which comes around a healthy CAGR of 19.23%, which is attractive and have doubled your capital in less than 4 years. In case of max return, which is for a period of 21 years, the absolute return is in the range of 8,395%, which comes around annualized return of 23.56%. That means every 3 years you are doubling your capital. If you have started a monthly SIP on this stock starting from 2016, the absolute return is in the range of 44.3%. The FII holds more than 39% and overall more than 86% of the holding is with strong hands. About 93% of analysts have given a buy rating on this stock with an expected max target of 2068 for next 1 year, which is approximately 48% from the current levels as per ticker tape analysis. It is one of the long-term bet which have consistently delivered good return over last 20 years. So one can safely be with long-term view. On position number 2, it is the largest IT sector company in the world by market capitalization. TCS, Tata Consultancy Services Limited. Initially started as Tata Computer Systems, was founded in 1968 by division of Tata Sons Limited. TCS is the largest IT sector company in the world by market capitalization of 169.2 billion USD. Its main business concentrated on financial services, technology, manufacturing, healthcare, public services, retail and telecommunications. It's the largest IT sector company with a market cap of 11.42 lakh crores. Here, the stock is trading at a PE of 34.3, which is above the industry average of 28.2, which shows the stock is trading at a higher valuation. It is commanding such premium valuation due to good key parameters such as ROE and ROCE. It is having higher ROE of 39.1% and ROCE of 48.9%. The company is having debt to equity ratio of less than 0.1%. With good dividend yield of 1.07%, which is a very good parameter. The company pledged less than 0.5% of shares, which is another good factor. In last 1 year, the stock has given a good return of 62.3%. If you consider last 5 years, it has generated an overall return of 146.8%, which comes around an annualized return of 19.8%, which is very good. In case of max return, which is for a period of 17 years, the absolute return is in the range of 2489%, which comes around an annualized return of 21%. That means in every 3.5 years, you are doubling your capital. If you have started monthly SIP on this stock from 2016, the absolute return is in the range of 80%. This company is having a strong promoter holding of 72.2% with good FII holding of more than 15%. Overall, 95% of the stock is holding in strong hands. Approximately half of the analyst has given a buy rating on this stock with an expected max target of 4,119 rupees for May 2022. Which is approximately 33% from the current levels as per ticker tape analysis. TCS is one of the best stock one should hold in their portfolio for long term. On position number 1, it is a Fortune 500 company and the largest private sector corporation in India. RIL, Reliance Industries Limited. Reliance Industries Limited is an Indian multinational conglomerate. Reliance is one of the most profitable and largest publicly traded company in India by market capitalization and the largest company in India as a measure of revenue. They are mainly into the business of oil refining and marketing, retail, petrochemical, digital services, exploration and media. Reliance Industries became the first Indian company to cross 200 billion USD in market capitalization with a market cap of 12.12 lakh crore rupees. Here the stock is trading at a PE of 27.5 which is well above the industry average of 13.4 which shows the stock is trading at a higher valuation. It is commanding such premium valuation due to its good performance over the years. It is having ROE of 7.66% and ROCE of 8.2%, which needs to improve. The company is having debt to equity of 0.32, which is good with a dividend yield of 0.34%. There is no pledged shares of the company, which is another good parameter. In last 1 year, this stock has given a return of 27.8%, which is good. If you consider last 5 years, it has generated an overall return of 294.9%, which comes around an annualized return of 31.62%, which is very good, which means it doubled your capital in last 28 months. In case of max return, which is for a period of 21 years, the absolute return is in the range of 3000%, which comes to be annualized return of 17.7%. If you have started monthly SIP on this stock from 2016, the absolute return is in the range of 92%. The company is having a strong promoter holding of 50.5% with good FII holding of more than 25%. Overall, 88% of the holding is in strong hands. Majority of the analysts has given a buy rating on this stock with an expected max target of 2545 for May 2022 as per ticker tape analysis. One should start accumulating this stock on dips to create a strong long-term portfolio. So these are the top 10 bluest or blue chip stocks for long-term portfolio. So please study these stocks for creating solid long-term portfolio. Next one is the bonus stock. It is not a growth stock as we discussed above, but it's a good defensive bet with good valuation as this can be an alternate option for FD. So the bonus stock is ITC. Established in 1910 as Imperial Tobacco Company of India Limited, the company was renamed as Indian Tobacco Company Limited in 1970 and later to ITC Limited in 1974. The company now stands renamed to ITC Limited. Its business is mainly into foods, cigarettes, lifestyle retailing, education and stationery. Some of the major brands are Sunfeast Biscuits, Ashirwad Atta, Gold Flake Cigarettes, John Players, Will's Lifestyle, Classmate Notebooks, Papercraft, etc. It is one of the famous FMCG brand with market cap of 2.59 lakh crore rupees. Here the stock is trading at a PE of 19.6 which is well above the industry average of 14.6 which shows the stock is trading at a higher valuation. It is commanding such premium valuation due to good key parameters such as ROE and ROCE. It is having an ROE of 24.8% and ROCE of 32.6% which is very good. There is no pledged shares in the company which is another good parameter. The company is having no debt which is good. The dividend yield of ITC is approximately 5%, which is equivalent to some of the bank FD rates. So you can get the interest as dividend plus capital appreciation. It is one of the strongest defensive stock, so no need to worry about the capital. In last 1 year, this stock has given a return of 10.7%, which is very low compared to its own standard. If you consider last 5 years, it has generated a negative return of 11%. In case of max return, which is for a period of 21 years, the absolute return is in the range of 986%, which comes around a CAGR of 12%, which is other than the dividend yield of 5%. If you have already started monthly SAP on this stock from 2016, the absolute return is in the range of 92%. The company is having strong FII holding of more than 12.9%. Retailers hold 45%. 83% of the analysts have given a buy rating on this stock with an expected max target of 365 rupees, which is approximately 73% from the current value for May 2022 as per ticker tape analysis. It is one of the safest defensive bet for long term with good dividend yield. One can expect decent returns out of this. For those who wish to accumulate wealth through systematic route, I will be sharing a small case, Finstar SAP, from the above mentioned stocks for beginners. Small cases are a new way to invest in stocks. Just like mutual funds, small cases are a bunch of stocks based on some theme. Here we selected stocks from the above mentioned theme portfolio for beginners. Small case will not charge any fee other than one-time registration fee of Rs 100. Small cases does not hold any stocks for an investor as a mutual fund does. However, the stocks will be delivered to the demat account of the investor. This is one good investment option through SAP route for long term. Link for the small case mentioned in the description. In the upcoming video, we will see fundamental analysis and technical analysis. And what is the basic difference between fundamental analysis and technical analysis? What are the various jargons used in stock market and much more? So stay tuned for further videos. Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.